Welcome to this week's market drama. Fairly quiet week last week. The S&P was down 0.5%. It is now down 3.8% for the year. NASDAQ was down 0.3% for the week. It's now down 7.2% for the year. Look, we had two strong weeks in a row. This past week was essentially flat. But when you look within the week, there was a couple of things, I guess, worth highlighting. One is the market was selling off Monday and Tuesday, and then it did reverse course. On Thursday, the US and the UK announced a new trade deal that got the market more excited. And there was also, by Friday, whispers of a meeting with China over the weekend, which kind of continued the upward momentum to essentially end us almost flat for the week. The other thing worth highlighting is we had the US Federal Reserve meeting on Wednesday. They kept interest rates unchanged for its third meeting in a row. And essentially, the press release showed that they're extending their wait and see policy approach. Look, we have a labor market with an unemployment rate at 4.2%. That gives the Fed more flexibility to remain on the sidelines for a bit longer before they have to kind of start lowering interest rates. When you look at the Federal Reserve governor's dot plot, essentially what they think rates will do, they are pointing towards two cuts this year, right? The market is actually, when you look at the bond market, is pricing three cuts starting in July. Nonetheless, there's not a huge difference between what the market thinks and what the Federal Reserve is telling us. A pretty kind of dull meeting there. Next week, we have CPI inflation, which obviously is really important here with all this talk of tariffs and the implications of what that means for inflation. It will be a good, important number to keep an eye on. That is it for this week. Stay tuned for next week.